Okay, we are now ready for, what are we ready for? We're ready for 8. 8 is just more of the same. Okay, they're giving you the total assets and the total liabilities to be at the beginning, and the total assets and the total liabilities at the end. You have to figure out the difference between the two beginning and ending. And we'll do that just like we did the other twos. How do you like that? The other two that we've been working on. Let's look at the worksheet. We want to go to, how would you figure that? Was it, did it increase or did it decrease? So what was our beginning? How did we figure our beginning? Our beginning equity was $24,000. Well, that's not right, is it? Let's see. They had $24,000, and they had a total of, oh, I see what they've done. You had $24,000 in assets. You subtract the $11,000 in liability. So you had a beginning here of 24 minus 11,000. That was 13,000. Beginning inventory, or beginning owner's equity. The ending equity was 34,000 minus 17,000. So the ending was 17,000. What's the difference between those two? If I do a little negative, we have a $4,000 positive increase. Now, list 2 reasons for that. How did I get these numbers? I took the assets for the beginning of the period, 24,000 minus 11,000, came up with 13,000. That was my beginning owner's equity. I took the ending the ending amounts, 34,000 minus 17,000 in liabilities, and came up with $17,000 in owner's equity. The difference between those two is 4,000. There's a couple of reasons that could be, because it doesn't really tell you why that happened. So you need to answer those reasons. So that's 8. You are going to find that the next two are very similar. 9 is going to look at, it's going to give you 9 is going to give you the same thing. It's going to give you the reported, hold on, let's get it straight here. Let's go back to it, because it gets very confusing if you don't see it and you just hear me talk about it. So 9 wants you to compute the net income. And to compute the net income, they've given you $28 billion in revenue minus $21 billion. Okay? So you've got your revenue is really very obvious, because you take your revenue minus the expenses. That's going to give you your revenue. And the next thing they want then is the stockholder equity increase. Did it increase or decrease during 2011? Well, if it had a net income, and net income affects owner's equity, what do you think happened to the owner's equity? And then give an estimation or your opinion of whether this is a good or bad company, okay? Now, let's move to 10. And 10's a little more complex. It's going to ask you to do some, again, calculations. 10 is going to ask you to lay this all out. We have assets, we have liabilities, we issued no stock, and we have dividend payments. Here's your assets, liabilities, and then you have an income statement. So you're going to put this all together in a puzzle. So let's go look and see what our template looks like. Here you go. The only way to really get a sense for this is you have to take these numbers and put them in their proper order and see how they connect. So they gave us liabilities at the beginning of 48,000, assets of 48,000 and liabilities of 22,000. We need to find out what the owner's equity is. Well, that's a very easy thing to do for you now. You know how to do that. You subtract these and come up with owner's equity, right? So you have your owner's beginning equity. Let's do the same thing with the ending. They give you a 60,000 asset and a $27,000 liability. Subtract those and come up with your ending. So now you're going to put your beginning here. They had no investments by the owners. We're looking for this net income. We know what the ending equity is, so we pull that down to here. How do you put these together? Just like we did in that one activity. So fill in all the blanks with what you've got. That will get you to here. The increase, okay, this increase, this net income is going to get transferred down right to there, right to this net income, and it's going to tell you the expenses then. And you decide whether the performance was good or bad and why. So just puzzle this out and know that these all connect together. That's a good one. That'll make you scratch your head for a while. So number 11 is simply asking you to state what each event does. How does it affect the assets of the building? Did it have an effect on it? I bet you can do this now. If you've done all the previous ones, you're going to be just fine on this one. Do you want to do A so you can have an idea of what they're talking about? We can do that. So A is Jack's Roasted Peanuts issued common stock after receiving cash from the sole stockholder. So they issued some stocks. How does that affect your assets? Does that affect it? Well, we got some money. That's an asset. It's going to increase the asset, correct? And it's going to be cash that is affected. So you're looking at each one of these and what its effect is on assets. So I'll kind of leave that one to you. And that is assignment 1-1. I do hope this has helped. If there's a better way for me to do it, please let me know, okay?